Trading the trend is one of the most profitable ways to trade the Forex markets. You have the trends that are fairly consistent and they are fairly easy to predict. The market moves further in the trending direction than it does in the opposite direction. So if you can get in on a trend, you're going to have a higher probability of success and the trades that you take can be bigger. So let's go to a chart. We're going to take a look at that Euro USD and see how we could use something called an SRT to take advantage of the trend. The SRT is simply short for support, resistance, and trend lines. It's one of my favorite ways to take advantage of a trending market. I'm going to show you exactly how to do that. So let's go to the chart right now and we'll take a look at SRT. So this is the Euro USD. This is the daily time frame. This is the market move that we were talking about just at the end here. Now, this all by itself, it's going to be a little bit difficult to get in on because we don't have any good signals, any good setups that we could take advantage of. But if we go to something smaller, like the 1 hour time frame, for example, we are going to see, let's get to the end, let's zoom out a little bit, that this is the trend. And we have plenty of opportunities to take advantage of this. Now, again, this is SRT, support, resistance, trend lines. So this is how we're going to take advantage of the market movement. When the market moves, it doesn't move in a straight line. Although on the daily time frame, it kind of looks like it does. This is an exception. We don't see this very often. You can take a look here. We don't get this kind of bigger market movement that's as smooth as this. So what we're trying to do is take advantage of the way the market does move. And the market moves in impulse moves, which is the bigger move in the trending direction. And then it's followed by a pullback or a correction, which is a smaller move that is against the trending direction. So we're going to take advantage of this zigzag pattern. So we've decided that in this area here, the market is starting to trend down. So we're going to start to take advantage of that. We're going to make trend trading trades. So the first thing is to find the most recent low. Where is the lowest low that has been made? And if we're looking at this area in here, well, this would be it. So I'm going to draw a line underneath that. So this becomes an area of support. The price hits this area and then gets bounced above it. And what we're doing is waiting for the market to simply move below this area of support. Now the candle can close below this area or it could simply move just a few pips below. When you define a trend, the trend is essentially a market that is making progressively lower highs in this case and progressively lower lows. So every high that the market makes is going to be lower than the previous high. And every low that the market makes is going to be lower than the previous low. So we get this downtrend. What that means for us is that we can expect the market to continue to move lower than the previous low, which is where our entry is going to be. We're going to be looking for this area of support. The market moves below it, and that would be how we get into a trade. From there, we're looking at putting a stop loss. So we're going to take a look at where the entry was and where that area of support was. And we're going to take our stop loss and move it just above that recent swing high. And again, this is going to be a fairly safe place to put your stop loss because as a trend moves, it is going to make progressively lower highs in the case of a downtrend. So this means that this stop loss should be fairly safe. All right, so another opportunity happens in this area. The market makes a low and then pops up again. It makes a high. So we can put our entry just below this area of support. And when the market moves below that area, which it does here, we would enter the short trade. Again, the candle can close below this low like this one and enter on the close of the candle, or just wait for the candle to move a few pips below. Now between that area of support and our entry, we're looking for that swing high, which is here. So this becomes our placement for the stop loss. All right, another opportunity is down here. Price bottoms out, comes back up. So we're going to use that as an area of support. Entry is triggered in here. As it moves below that area of support, stop loss goes in between that entry and that area of support, that highest high in between the two. So this is where our stop loss goes. Now the market does pop back, but our stop loss isn't really threatened. It's still making consecutively lower highs. So again, we've got another example here. It makes this low. Entry is here. stop loss goes here. And we would continue this routine until we're essentially out of the trade. The trend is over. It starts going sideways, whatever the case is. But this is how you use support in a downwards trending market to get you into a trade. Now, I talked about SRT, support, resistance, and trend lines. When I draw an area of support, so we've got this swing low. Sometimes the price doesn't always get to that area of support. It will make a low that's a little bit higher than that previous low. And this is a case of it right here. So we have this low followed by a higher low, and the market does pop up. So what I want to do in that case is draw a trend line to connect that. And I'm looking for the close below the trend line now. And that happens in here. So I can take my stop loss, place it just above that recent swing high, but you can see my entry is going to be much better than if I was waiting for the close below this area of support. The trend line gives me sort of a heads up, a head start. I get into the trade a little bit earlier using a trend line. So if I can draw a trend line, and it should be a nice trend line, it shouldn't be something that you have to kind of fake. If you're really looking to find a place to draw a trend line, I would not consider it to be a good trend line. I want to see a clear low followed by a second higher low that is very clear as well. I can draw them, connect the lows together, draw the trend line, and that would give me a better entry. Now my one-to-one target, if this is how you want to do this, would be in the same place. I'd still have this area of support. I'd still have my stop loss. And I'd have this one-to-one target. And for all the other trades that we were looking at, we would enter the trade as it got just below this area of support, and we would target one-to-one. Now, you could do a little bit more. You could go 2-to-1, 1.5-to-1, or whatever you feel comfortable with. But the example I'm trying to show is that if we do this, we set this up with one-to-one, using the trend line can get us a much better entry. Our stop loss will be smaller and our profit target will be bigger. So trying to get the trades that use the trend line is really something that I do want to try to get. I really do look forward to the trend line version of the SRT trades. Now, what I want to show you is how you could let a trade like this run. One of the great things with a trend is it sometimes can really continue. You can get a lot out of a trend. So I want to show you how that works. So we've got this market, it's moving down, and I'm going to take my entry, and I'm going to put it where we had it originally. So this would be our entry to go short. And our stop loss, same place, just above this recent swing high. Now, it comes back to the definition of a trend. We're going to make consecutively lower highs, and that's what's important, because if we're using our stop loss, we're going to be placing them over the highs. What we can do is trail the stop loss along these new lower highs. So every time we get a high, we get a move up, the market will create this level of support and then bounce up and then break through that level of support. We have a new place to put our stop loss. I'm going to add another line to this just so we can demonstrate that. And what I'll do is I'll make my stop loss line red just so we can see the difference. So we've got this red stop loss and our entry is here. Price drops down and it pops back up again. And because it is making progressively lower highs, I'm not in much worry that this high is going to be taken out. Now what happens is when we get a market that moves below that support area, we are going to continue that trend of making new lows and new highs. So once that area has been broken, we are on the way to making a new low, which means that high should be fairly safe. So from here, I'm going to place my stop loss just above that high. And we're already in profit on this particular trade, but we're going to be watching for those lows as they form. So the next low is here, and it gets broken down in here. So in between where the area of support is broken and the support itself is where I'm going to put my stop loss, that swing high that appears in between them. And again, we have another area in here. Support is broken here. Stop loss gets moved here. And we can do this all the way down. Broken down here, area of support. Stop loss is here. And again, area of support is broken here. Stop loss is here. Now it's important to wait for the area of support to be broken, that the market does pass that level, because we could get a market that pops up and then wobbles around and just keeps moving up as the market changes direction. So in order to keep that stop loss safe, we want to wait for the price to get lower than that previous area of support. Now again, this is a downtrend. Everything works the same in an uptrend, it's just backwards. So again, we're going to see this swing low, the market pops up, and we're putting this area of support down here. Now nothing happens until this region in here. So this would be the highest high between all of this, and this is where I'd put my stop loss. And then again, right now, currently, we're going to move our area of support down here. And this is a current chart. So what we have to do now is wait and see what happens with the market. Once it gets just below this area of support, then I'd be looking to move my stop loss just above that area of resistance, that recent swing high. So this is how you can get into a trend once it's already started. This is how you can get the most out of a trend if you're lucky enough to get in early and you want to continue to trade along with the trend and catch as much as you possibly can. On this one, we would have had a stop loss of approximately, let's just take a look at some numbers, approximately 25 pips. And we've trailed the stop 200 pips right now. And we could potentially be looking at more. So this is a great way to use the market to tell us when to get into a trade, where to place our stop loss, and eventually how to get out of a trade. So I hope you liked that video. It is a great way to take advantage of market movement. If you can get into a trade and then just take advantage of those progressively lower highs and lower lows, as is the case in the current Euro USD, we can get into a trade in the trending direction, and these become some of the safest, most profitable ways to trade. Lock into a trend and just take advantage of the market's own support and resistance levels. And if you can, draw some trend lines, take advantage of that. I hope you liked the video. If you did, give it a big thumbs up, and I'll see you in another video. And in the meantime, you have a great day.